Good morning, everybody. Good morning. It is Thursday. It has been a long week, even though it's only been 3 days. And the reason for that is we got our fourth less than 30% range on the SPX in the last 2 weeks. Call it the last actually 8 days. 4 of the last 8 days. Yesterday, 27 points.
That was a good call. Excuse me? That was a bit of a scare. Look, you can't be serious, man. You cannot be serious!
Even bring in that 31 and 33. You've had essentially one day, and that was last week, Friday, where there was actually a little bit of range to be traded with. And there's nothing really to add. We are in a very extended rebound off of that March low. Today is the full moon. This high was posted here on Tuesday, which falls right inside of the full moon window. We have a very clear resistance area of this 4136, and I'll show it to you over the weekend when I do the Q1 review and Q2 forecast. But man, we have still, you can see this candle right here from the open on March 31st, after we had that tiny gap up. That March 31 candle, that first 5-minute candle right there, we've still not come down here to test this 4064, which for those of you who draw on your charts or don't draw on your charts, this is your 50 retracement from the March highs of 2022 down to the October low. And again, breaking down below that is pretty essential to get into the 1, 2, 3 gaps. I'm only here on a 5-day chart. But you do have your trend line, which we do need to have a little bit of respect for, which right here, semi-accurate, right around 4060. And what it's doing is it's coming off of your 2 March lows, your March 13, March 15, 38. You can see here very clearly, as we had a week ago, we touched right on it. We had the same thing when we had that 3909 a couple of weeks ago on a Friday. Now, in the event that we do get a sell down today, just remember, markets don't like to bottom on Fridays. So a week ago, 2 weeks ago Friday, when it was at 3909 right at the open and we rallied into the rest of the day, that was where this kind of began. If we're looking at a low heading into the end of the session, we're very likely to start seeing a lower low come Monday or Tuesday of next week. So be careful not to chase it. You will have your data there on your SPX minus 1%, because as of now, again, we have not had a minus 1% visit in what is now 9 trading sessions, the longest since the October lows.
That was a good call. Excuse me? That was a bit of a scare. Look, you can't be serious, man. You cannot be serious!
I will have to go back and put the data in to see where it was prior to that, but I can already tell you it's going to be October of 2021. I know it already because I know the data. So you have 9 trading sessions where we have not made a visit to minus 1%, let alone close below 1%. So as of right now, it's 40, 49, 48. And if I come over here, which I don't have on the screen, but I am typing it in, I promise you, as of right now, same as they closed, the 40-50 puts for today are trading right at $1.70, $1.60, $1.65. They closed at $1.77. So this is definitely here. I'll bring it over here. This is definitely something that you want to be taking advantage of if you are looking to play the lottos, where you're looking to trade a small position in this for that possible 5-bagger, 10-bagger. Over on SPY, that would be right around 404. And that was from yesterday. So, yeah, right at 23 cents is where they closed. It is not very strongly headed towards that as of now, but that is something you want to have in mind. And again, over here, the main problem that we are really having here is your VIX. Your VIX is dead asleep. 2018, 2019, 2019, dead asleep on the VIX. You need a spike on your VIX if we're going to be able to get any kind of extremely attractive action and kind of get back to normal, where we're swinging, we're taking some really nice way out of the money spreads and calls and being able to bank some money on them. But it is a very, very, very tough scenario right now. And in this scenario, looking here at the Dow, here's your Dow coming off of that March low, March 15th, where SPX was right around 38.38. And this extension that you've had here since 39.09 was 2 weeks ago. This is SPX 39.09 right here. And you can just see the shift into value, even though you were still getting that move over there in the QQQ. And a lot of this has to come with what's happening over there on the bond market. So rather not to waste your time, here's your QQQs, and I'm looking at a 5-day chart, only a 5-day. But like I was saying on yesterday, 317, we get 315. 315, we pressure 313. Your 5-day lows are 312.60. This is pre-market going back prior to last week, Thursday. We're right here on 313 right now. We're right on the pressure line with that Toyota Corolla 308 well down below. But you are starting to see a little bit more pressure come over here onto the QQQs. So even though we did get a little bit oversold over there yesterday, kind of throwing out a couple of warnings to be careful, 27-point range on the SPX, there's nothing you can do about that. And here you have your IWM. And again, here, this is your SPX 3909. You had your little bit of a move up, and you have had a pretty aggressive move to the downside. And a lot of that is what we've been talking about is happening over there with that KRE, with those regional banks. The banks are having a lot of trouble right now. And if something does crack, not only are we looking for a 4064 break, but we are definitely looking for a minus 1% day, whether it's today, whether it's next week. Your odds are increasing greater and greater and greater every trading session that we don't have a minus 1% visit. And this cheap VIX down here is making it even more and more advantageous for you to take advantage of that. Because again, looking at how that one went just a few days ago, you were looking at 1,100% on that with a couple of cents. And it was, again, still not a minus 1% day. So the advantage is there to be trading the 0 DTE, SPX more so than the SPY on the put side, looking for that minus 1% level. 40.50 today is what it is, and not over committing yourself into a position so that the risk that's being managed to be placed into the trade is something that can very well be absorbed should it be another one of these 27-point days. So I'll catch you guys in the chat room. I hope you all enjoy your very long weekend. I am going to be very busy over the weekend. I will have your Q1 review, Q2 forecast. I'll also be looking at where we are for the course of the week heading into next week. I will also have a glacier update out over the weekend, and I will be doing one-on-one calls with everyone who wants one. Just send me a message in chat, set one up. All weekend long, I'm here available for you. Have a good one.